Welcome to today's webinar, and thank you so much for joining me for the Orientation to Ontario's Establishing Credit in Canada's webinar. My name is Ingrid, and I will be your presenter for today's webinar. I am an employee of Costi Immigrant Services, and we are the coordinating agency for the Orientation to Ontario's project. We're going to talk a little bit about credit today and how you would establish your credit in Canada. If you don't already live in Canada, or if you are from a society that does not necessarily deal with credit or does not have a system where credit is the major source of monetary funds going back and forth, then this may be a little bit unusual for you. However, if you are already here and you're just looking to find a little bit more information, hopefully this webinar will give you that which you are looking for, okay? Now, maintaining good credit is pretty much something that everybody wants to do. So when we talk about credit, we're talking about the delayed payment arrangement between a borrower and a lender that allows access to money for repayment at a later date. So the term credit, if you're not aware of it, is simply money that is not necessary. It's not yours. You've borrowed it and you'll pay it back at a later date. Okay. Now, as we go through the webinar, you may have questions. You can use the raised hand sign to let me know that you have a question, or you may also type your question in the questions and answers dialog box that is shown here in this diagram. I'm just going to highlight it right here. You can type your questions. I will see them, and depending on how many questions I'm getting at the time, I may answer at that time, or I may wait until the end of the webinar to do so. But please do feel free to ask your questions as we go along. On our agenda, we'll look at establishing credit. It's just one topic. It will take about half an hour to 45 minutes for me to explain everything fully. And I'll share some resources with you from the Orientation to Ontario's project. Now, establishing and maintaining good credit is essential in using lending products from major purchases. Keep your credit in good standing by honoring in terms of your agreement. If you miss payments or your payments are late or consistently exceeding your authorized credit limit, that will impact your credit negatively and your credit privileges in the future. So this is something to keep in mind as we go forward. Let us talk about the different types of credit that you'll find here in Canada. So we've got what's known as revolving credit. This is where these are generally credit cards. They may be secured or unsecured credit cards. When we talk about unsecured credit cards, these are the most common type of credit cards. They're not secured by collateral. So it means that you've gotten this loan on a card that is not attached to any collateral. So you don't have to use your house in order for you to get a credit card. You simply need to go to the bank and apply for the credit card. Now, the institutions that will provide credit cards are generally financial institutions such as banks and credit unions. You can make purchases, pay your bills, with your credit card, and you can also make online purchases as well. The conditions for these cards is that there is a credit limit amount, there's a minimum payment, and there are interest rates. Then we also have retail store cards. These also fall under the revolving credit. These retail store cards are generally offered to you by large retailers. We're losing quite a bit of those retailers now, so I'm not sure how many of them you'll see around, but we used to have Sears not too long ago. You would get a Sears credit card. That's a retail card. When we had Zellers, you would get a Zellers card. Now the Bay also still provides you with a retail store card, and you can purchase things in that particular store. Some of the stores these days have their cards attached to major credit card companies. For example, I know that Walmart has a credit card, a MasterCard, that's attached to MasterCard that it's your Walmart credit card, but you can use that card to purchase anywhere. You don't have to use it in Walmart specifically. You can use it to make purchases at any store at all. The credit limit for those, the interest rates are usually high, and they usually go around 28% versus the regular 19% that you would get on a regular credit card that you perhaps would have gotten from the bank or a credit union. Then there's the overdraft protection. Now, I'm not sure how many of you are familiar with overdraft protection, but this is also another form of credit. It's connected to your bank account, and it allows your checking account to temporarily. So for example, if you've got your account and your account's got, let's say you put $1,000 in your bank account. You have an overdraft protection that was provided to you by the bank of $500. And you went out, you made a purchase in your account, the amount of money you placed in that account was $1,000. Now you go out to purchase something. The item you're buying is, let's say, $1,200. Remember now, the money that you have in the bank is $1,000, but the bank provided you with extra credit of $500. So basically what has happened is you're able to make your purchase of $1,200 using the additional protection that you've got, the overdraft protection. So this means that your account does not go delinquent. You don't go into overdraft. So you're able to actually make this payment. And these are generally offered, again, through the financial institutions that are connected to your bank account. And there's a small fee to use them. And the interest cost is generally not as high as you would have with a credit card. This kind of credit is pretty useful for you to have. A line of credit you can think about later. Perhaps the bank will give you a line of credit. A line of credit is also a flexible loan from the financial institution, and they will provide you, it may be secured or unsecured. So definitely check that out and see if you qualify for a line of credit as well. Let's look at installment credit or just loans on a whole. There's what we call buy now and pay later. The buy now, pay later loans or deferred payment loan are offered by retail stores for purchasing higher cost household items such as furniture and appliances. The payment method are usually set up so you either pay in full on the due date in lump sum, or you may make installments. So you may make payments, let's say $20 per month or $50 per month. The setup fees, sometimes they have setup fees. If the loan is not paid in full by the due date, high interest fees apply, and it goes right back to the date of your purchase. So many retail stores, for example, we've got a lot of furniture stores that will offer these installment credit loans to their customers. The condition is that you pay in full. So you may have, for example, you go to a furniture store, you want to buy some furniture, but you don't have all the money at the time when you're making the purchase. If you're credit worthy, the furniture store will perhaps offer you to have the furniture, so you can fill up an application. They will give you all the furniture that you're looking for. So let's say you're looking to purchase about $4,000 worth of furniture. They give it to you and they say, the condition is that you pay monthly. Or they may say, you can pay monthly this amount. So you can pay $500 monthly, or you can wait until the end of the year and then you pay the entire $4,000. That's how that works. Some of them will tell you that there is no interest going along. There's absolutely no interest if you pay by the due date. So if you are able to pay for the furniture before the end of the contract period that they gave you, let's say a year, and you're able to make that payment in full within 9 months or 11 months, then you may forego the interest. But they all come with different conditions. So please keep that in mind. And then you've got rent to own. When I first came to Canada, I had no idea that there was rent to own. We don't rent anything to own it where I come from. So it was a little bit, I thought, oh, you can rent furniture? Then what happens if you don't want it? Do you take it back to the store? And yes, you could rent it. And if you don't want to keep it, you can always return it to the store. I don't know what they do with the furniture that's returned to the store, but you can do that. These rent-to-own loans are provided by the retail store, and you will be able to purchase the item at a higher cost and pay for them in installments. The terms and the conditions vary from store to store. There's also what is known as a consumer loan, and these loans are made by financial institutions. They're used to make very large purchases, such as cars, renovations for your home, and you'll receive a lump sum and a set interest rate, and also a repayment schedule, and the rates may vary. So for example, if you want to purchase a car and you don't have all the money to purchase the car, it is highly possible that you may go to the place where you need to purchase the car, and they will provide you with a loan from that company, and you'll be able to pay monthly. So if you want to get your car, the car's $10,000, you can borrow that $10,000 from the car dealer, and they will give you a monthly payment. This is what they refer to as consumer loans. We talked about the credit cards earlier, and now I just want to talk to you about the features that you will find on the credit card. They've got what is known as the annual fee. The annual fee is a yearly fee that you pay for the use of a credit card, and these fees vary. Not all credit cards have annual fees, so when you're going to apply for a credit card, ask these questions. Does it come with an annual fee? Can the annual fee be waived? How much is the annual fee? Do I pay an annual fee this year and then moving forward, I don't have to pay an annual fee? These are all very good questions that you really do need to ask. Not all, like I said, not all cards come with them. Cards with fees usually have some benefits, such as lower interest rates. There's generally a rewards program, or they may come with extremely high credit limit. Then there's the APR, the annual percentage rate. The APR describes the interest for the entire year rather than on a monthly basis. Different credit card types have different APRs, so it is again important to compare them. If you do not pay your balance in full each month, so with the annual percentage rate, if you don't pay the balance on your credit card in full every month, then you are charged interest from the moment you purchase something. So to keep your credit in good standing, one best practice is that when you get a credit card, you will make the purchase and then you'll pay off the debt by the end of the month. Many people don't understand that concept. So let's say, for example, you've got a credit card and the credit card is $500. You need to make a purchase. You're getting paid at the end of a biweekly period. You're getting paid, let's say, $2,000. Your credit card has a $500 limit. You've made a purchase of, let's say, $400. What you should do if you want to build your credit and create a good credit history, one of the things that you can do is, even though you have the cash money that you're going to get paid in 2 weeks, take your credit card, make the payment of $400. At the end, when you get your pay at the end of the 2-week period, you take that $400 and you pay the full amount on the credit card. That will keep you in good standing with the creditor, and the credit score that you will get, your credit will be healthier. It'll reflect that. So by building your credit, you then establish yourself so that the limit that other creditors will give you will increase. I hope that makes sense. Your credit limit is the maximum amount you can borrow on your credit card, and the grace period is the amount of time you have to pay the balance on the card before you're charged interest on it. Grace periods starts on the date that is listed on your credit card statement, and they must be at least 21 days. So if you pay your bill in full each month by the due date, you will never be charged interest. And that is the goal that you should be aiming for. The minimum payment is the smallest amount that you can repay, and it's generally about 2 to 10% of your balance owed. If you only pay the minimum payment, the interest then becomes compounded, and that can make the actual cost of your debt extremely high. So again, try to stay away from minimum payments. If, however, you are in dire situation and there's nothing else that you can do, please maintain that minimum payment until you're able to put a lump sum payment on the credit card. There's some rewards programs. When we talk about rewards, we're talking about you collecting points. It could be air miles so that you can fly, or some credit cards actually have, my TD Visa actually gives you $1 every time that you spend. So, you get $1 per, let's say, $1,000, or $1, an actual dollar. So you don't have to redeem the points. You can use that money at the end of the period when you've accumulated enough to buy anything that you want. There's some insurance benefits, and that would mean that some credit cards will have travel insurance benefits. They'll have rental car benefits, life insurance, and some have balance protection insurance. So if you lose your job, then they will pay the minimum payments for you until you're actually able to start making your payments again. Many people opt to not have the balance protection on their cards, but it is actually a very good idea for you to do so. Then there's the cash advance, which allows you to borrow cash from your credit card. This is usually, there's usually no grace period. That means interest charges begin the same date and time that you take that cash advance. And they often have a way higher interest charge. So if you can avoid doing cash advances, please avoid it at all costs. Some of the things that you'd like to consider when you're choosing a credit card is, you need to think about what is the institution offering you? Perhaps this particular bank is offering you a card that they're saying, well, we'll give you points, and your interest rate will be, let's say, your APR will be 5% for the first year that you have the card. And it'll increase to 28% at the end of that 1-year period. Then you go to another credit card company that says to you, well, your APR will be 19%. We'll give you $1 for every $100 that you spend on your credit card. And that APR remains the same for the duration of the time that you have the credit card, or until you can negotiate something better. Then you need to decide which one of these cards are you going to take. Will you take the one that will give you the low APR for 1 year and then increase it to 28%? Or are you going to take the one that is going to give you $1 per every $100 and a 19% APR across the board? These are all things that you want to think about. You need to understand what it is that you want the card for, what do you need the card for? Do you want the credit card just so that you can start building your credit? You can start establishing yourself in Canada. Or are you getting the card because you need to make a really large purchase? You'd rather make the purchase with a credit card and take your time to pay that money back, or you just want to have a credit card so that you can have a safety net just in case you ever ran into a situation where you needed to have some extra cash on hand. So shop around, find the best interest rates, find the best rewards program, and also definitely make sure that you read the fine print. Okay? Let's take a look at prepaid cards. I'm sure that you've heard of them before. Prepaid credit cards are not a form of credit, okay? You can go to the store, you can pick up a prepaid credit card where you use that card to, let's say, give to your kids, or you want to purchase things online and you don't want to use your debit card. So you get a prepaid credit card and you use that prepaid credit card to purchase your online stuff. You can do that. Some of them are single and they're reloadable. Some of them are not. You cannot, however, establish credit using a prepaid credit card. They do not improve your credit history at all, and some of them may have additional fees. So while they are convenient and good to have in some cases, especially if you want to make online purchases and you don't want to use your debit card, or you don't want to use your regular credit card because you feel that for security reasons it is better to not do that, then please be very conscious of the fees that are attached to these cards. And also keep in mind that no matter what you do, it is not going to impact your credit either negatively or positively. Okay? Now, we're going to look at the credit bureaus and what they do in the next slide. So we've got the credit bureaus. In Canada, there's two. There's TransUnion Canada and there's Equifax Canada. TransUnion and Equifax are the bureaus that will provide creditors with your information. So when you begin to establish credit, when you get your credit card or line of credit or overdraft protection, what will generally happen is that the credit bureau will start to collect information on you. They then will create a credit report. The credit report will have a credit rating, and that credit rating will be provided to the creditor that you're seeking to borrow money from. So what is a credit report? You can go to www.fcac-acfc.gc.ca and you'll find a lot more information on credit reports and just credit in general. Now, your credit report is a summary of your credit history. So if you have ever used credit, so if you've used a credit card, or you've taken out a personal loan, or you've used buy now, pay later, you will have a credit history. As soon as you begin to use credit, the bureau starts to collect this information. Your credit report is created when you borrow money or apply for credit for the first time. Lenders will then send the information about your account to the credit reporting agency, and your credit report will include personal information that is available in public records, such as bankruptcies. It contains factual information about your credit cards and your loans. It does not give an explanation. Let's say, for example, you were thinking of, you got this credit card, you lost your job, you're unable to make your payment, and you've said that to the creditor. The credit bureau does not care about that. They will not include that in the credit report. It literally just provides facts about your actual loan or your credit card. Okay? So it'll give information like when you opened the loan, how much do you owe on the loan? Do you make your payments on time? Have you missed any payments? Do you go over your credit limit? All of these things are included in your credit report. Now, you will get things like your telephone bill, your internet bills. All of these things constitutes your credit history. So think about all of that as you go through paying the bills that you may have, your gas bill if you're paying for your natural gas, your hydro bill, your water bill. All of these things comes on your credit report. Let's look at the credit score. Again, you may go to www.fcac-acfc.gc.ca. That's the government's website, and you'll find more information on your credit rating, credit scores, and things like that. Now, the credit score is a 3-digit number that is calculated using a mathematical formula based on the information in your credit report. So this is not done by hand. Someone does not sit around and calculate this. These are numbers that are placed into different calculations that are automatically generated based on the information that is filtered into the matrix, okay? You get points for actions that demonstrate to the lenders that you can use your credit responsibly. So things like we talked about before, you're paying your bill on time, you've paid back your whole, the whole amount that you were supposed to pay on your credit card. You have a monthly payment and you're making your monthly payments on time. They're not missed or anything like that. All of this is factored into how your credit score is made up. Now, you will lose points for things that show the bureau that you have difficulty managing credit. Now, in Canada, credit scores range from 300 to 900. The best score is the higher number, so 900. Your score will change over time as your credit report is updated. And this is done on a very regular basis. Businesses use your credit report to score, will use the credit report and score to see how risky it is. So should we lend you money or should we not lend you money? And it's truly up to the lender to decide on the lowest score that they will accept to give you a loan. Lenders may also use your score to set your interest rate and credit limit. If you have a high credit score, you may be able to get a lower interest rate on loans, which can save you a lot of money over time. I'm just going to take a look at the scores right now so that you'll get a better idea. Many of the lenders and credit reporting agencies report credit scores under different brand names. You may hear something about your Beacon score. So someone may say, well, your Beacon score is 750. If you've got a Beacon score anywhere between 750 to 900, that means it's excellent. Some will say your Empirica score, and some will refer to it as your FICO score. So just to keep these things in mind so that you know what they're talking about, this number, the 3 digits that are assigned to you, it's personal. It's not between you and your family. It's your credit score, and a person with this kind of score is considered to be less risky to get a loan. Someone between 700 to 750 is considered that you've got very good credit. Now, having good credit will enable you to get ahead financially. I can tell you that from personal experience. If your credit let's say your credit score has gone down, you need to do everything in your power to get it back to a place where it is acceptable. 750, 700 is very good. This means that you will get a loan you get a mortgage, a car loan, things like that. 699 to 660 is considered good as well. You will get loans, but this would mean that they feel that you're at a higher risk of not managing your credit well. And under these circumstances, what will potentially happen is that you will end up with higher interest rates. When you get to 659 to 620, yes, you may get a loan. Definitely the interest rate will be exceptionally high, and because that is considered not so good. And then when you get to 500, no one is going to touch you at all. So think about all these things as you go about your business. You may think, well, I don't really need credit. Believe me, there's going to come a time when you will absolutely need it. You can get a copy of your credit report from TransUnion. You may contact them at www.tcu.ca, and their telephone number is 1-866-525-0262, or you can contact Equifax, which is 1-800-465-7166 at equifax.ca. Just to give you a little bit of tips as we come to the end of our webinar about ways on how to just manage your credit wisely. We talked about this in the beginning. This is just a summary. Always pay your bills on time. Try your very best. I know that sometimes it can be challenging depending on your financial situation, but always think about the fact that if you've got a credit card, the money on that card is not your money. It is a loan. The credit card is yours, but you have gotten a loan from a financial institution, and this money must be paid back. You can't use it all and say, I'm going to pay it back 6 months from now. It does not work that way. You must use it, pay it back within the designated time frame, which is generally within 21 days. If you pay within 21 days, then you do not have to pay interest. If you pay outside of that 21 days, but you've paid within a month, then it means that you would have paid your bill on time anyway, okay? Pay your bills in full by the due date. Try to pay your debts as soon as possible. Don't wait. Talked about that. Do not go over the limit on your credit card. Some credit card companies allow you to go over the limit. They have a justification for it. They will allow you a certain limit to go over your credit limit, but it will reflect on your credit score, on your credit report. So do your level best not to do that. They'll allow you to go over, let's say they gave you a limit of $5,000. Some companies will allow you to go over the $5,000 by, let's say, $100 or $200, and then they will charge you an additional sum to balance that out. So they'll charge you a fee to go over that the limit that they gave you. So now you're not only paying back $5,100, you're paying back $5,100 plus how much the fee is, which could be anywhere from $20 to $50. Keep your credit card balance well below the limit. Do not apply for too many credit cards. Many people have asked the question, can I just apply for as many credit cards as possible? Do not do that. It makes you look like you're credit shopping, and it impacts your credit negatively at the end of the day. 2 to 3 credit cards is enough for any one person to have. Okay, hopefully this information is good information for you. Now, I just want to introduce you to our website. It's the Orientation to Ontario's website. If you've enrolled for our webinar, chances are you've already been on this site. Please do take an in-depth look. We've got a workbook, we've got fact sheets. There are group workshops that you can participate in if you are here in Canada. There's a settlement organizer that has been designed to help you, and there's an online checklist, and as well live and recorded webinars that you can access whenever you like. Whenever we've got a live one like we're doing today, please feel free to join us. If you don't have the time, you can also go to our YouTube page and watch our pre-recorded webinars as well, or listen to them. There is live webinars that you can listen to where you'll have the opportunity to ask questions as we go along. Now, our project is funded by Immigration, Refugee, and Citizenship Canada and the Ontario Ministry of Citizenship and Immigration. The project is called the Orientation to Ontario Project, or O2O, and we are coordinating this project. Costi Immigrant Services coordinates this project, and Costi is a multicultural agency that serves over 39,000 clients in the Greater Toronto Area in Canada. So if you are looking for settlement assistance, please do feel free to contact us at Costi Immigrant Services. You may contact us through the O2O website or call the O2O line, which is 1-855-626-0002. Or you may send us an email at o2o@costi.org. I want to thank you so much for joining us today for this webinar. Please do feel free to contact us if you have any additional questions that you may have. Please absolutely shoot us an email and we'll be more than happy to assist you. Have a great day. Thank you.